Good morning, everybody. It's the 21st of October. I'm Joe Neighbour from Signal Centre, and this is the latest instalment of Talking Ball, episode 481. So going to get stuck straight into the news today and then move on to some charts as usual. Again, just me today, Steve off, enjoying a couple of rest days. So in terms of what's going on news-wise, certainly in the UK there and Europe, there are more concerns about coronavirus making a comeback. The Czech Republic's indoor spaces once more requiring face masks, Latvia closing bars and shops, and Russia, where weekly infections just hit an all-time high, declaring the period between October the 30th to the 7th of November to be non-working days. UK is yet to bring back any restrictions despite a surge in infections and a rise in hospitalisations and deaths, Health Secretary Sajid Javid said. Meanwhile, the EU leaders are expected to discuss scrapping the traffic light system of travel restrictions, easing the movement for the vaccinated. So clearly more concerns as the temperatures turn a bit colder in the northern hemisphere. In terms of what's going on the corporate front, the Chinese company Evergrande Group shares fell as much as 14% yesterday after the cash-strapped developer ended discussions to sell a stake in its property management arm, a deal would have given the company a major infusion of liquidity. So that is still very much a concern. Elsewhere in the corporate front, PayPal is exploring a 45 billion acquisition of social media company Pinterest in what could be the biggest technology deal of the year and move the payments company closer to its ambitions of becoming a super app. In terms of what's going on in the crypto space, Bitcoin touched a high of almost $67,000 yesterday, galvanized by the success of the launch of the first US Bitcoin futures exchange traded fund, the second busiest ETF debut on record, and another step into the financial mainstream. Tech stocks underperformed over the course of the session yesterday. IBM and Tesla both losing ground in the wake of their latest earnings overnight. UK markets have opened up a little bit higher today, certainly off of their worst levels anyway. Sorry, it's a little bit lower, but off of the worst levels. So let's get stuck into some charts, shall we? This is the FTSE I've got here, but I'm going to start with dollar index. So dollar index still remains within this bullish channel. It's dropped down to support at 93.43, which seems to be holding right now. We did see a close below the 93.73 level, which was the first level of support that was looking to do a job, but we closed below that yesterday, and we're now approaching the lower end of this bullish channel. That will be a real key test for the dollar index. If it can hold above that, then I would believe that buyers will step back in and we'll see a push higher. Obviously, that is going to be influenced by the risk on, risk off trade. If there is a move to risk off assets, then the dollar index could see a little bit of a push to the upside. But for now, it seems that it's on the back foot, and we're waiting to see if this 93.43 level and the lower end of that bullish channel can do a job. Looking at EURUSD, that continued its minor rally, but still finding resistance at this 116.64 level. We've rallied into that again this morning, but have rejected on the first attempt at a break above that. So for now, this could be, potentially be an opportunity to sell on an intraday basis in line with the dominant trend when it comes to Euro US dollar. If we look at cable, that's continued its rally, having broken out of this short-term downtrend. No sign of it reversing at the moment, although there is a bit of weakness on the charts today. Overall, it still looks pretty positive in the very short term. It has been a very sharp move to the upside. We've got resistance up at 138.91. That's the first level to look for on the upside for potential signs of fatigue in this latest move to the upside and whether or not we're going to see any sellers step in. Overall, the chart still looks pretty messy. Pretty range bound, a lot of false signals as well, which is making it pretty difficult to trade. If we look at some of the riskier assets like the Aussie markets, Aussie yen in particular catching my eye today because we've seen a post yesterday above the highs of 85.80 on a closing basis, but today we've seen quite a sharp reversal. We have made new highs, but we've also engulfed all of the gains that we made yesterday. So that is a pretty potent looking reversal candle in my eyes. And given how strong it's been in the last few sessions, I think we've got 10 or 11 consecutive up days. This could potentially be a sign that things are about to unravel on this in the short term. Maybe a little bit of a corrective move, some profit taking, or some speculative shorts being positioned around here. If we look at Aussie dollar, that closed above the resistance at 74.77 to complete this proposed double bottom pattern that I mentioned yesterday. So we've got the low here with this double bottom, the neckline up here, which we've broken above. We are reversing at the moment to retest that new support at 74.77. So we need to give that a bit of time to see if there is any appetite and whether the buyers are ready to step back in and consolidate price above that level. So looking quite good on that front. Again, looking at some of the yen pairs, yen obviously been exceptionally weak lately. The euro yen market rallied just shy of our measured move target of this range that's taken shape here. So a measured move of this 100% higher comes in at 133.53, and we still just in front of that at 133.48. So about 5 ticks in front of it. Posted a bit of a doji, and we are seeing a rejection at the moment. So have to wait and see whether or not this is going to stick. Again, it's been such a strong move higher, 10 or 11 days worth of green candles there. So there is some potential for a bit of cooling off there, I would suggest, in the short term. If we also take a look at dollar yen, that's rallied into this really important blue line that we've got here at 114.32. We have to go some way back to find when that was last relevant, beginning in 2018 in October, going all the way back to May 2017. So seems to be stalling. We posted a doji yesterday. We did see new highs, but then we closed back pretty much where we opened, in fact, a little bit lower, and we are seeing further weakness today. That will do for the FX side of things. I think the main interest for me certainly is maybe this yen weakness taking a bit of a pause for breath, and we could see a bit of a correction there. If we take a look next at Bitcoin, as we discussed, that reached new highs yesterday. It's poking its head above this key resistance level, the previous highs from the 14th of April. We saw a decent close above that level. We've seen a little bit of a pullback to test that level to see if there's some acceptance in price, and so far that seems to be the case. It's still holding above that level, and therefore we can maybe expect higher prices. Obviously getting a big boost in the arm from the new ETF that's been listed this week. Moving on to oil. No signs of this slowing down. Yes, we did discuss yesterday this potential for a double top pattern. We did see a big move to the downside through that support at 81.11. But as I mentioned yesterday, I was only really interested in that if we saw a significant close below that level. And of course, it didn't happen. So I imagine there would have been a few people trapped in this trade here, looking to sell the break, which never occurred. And then we saw a very big reversal. And from then, it's just been one-way traffic moving higher. That was off the back of the inventories yesterday, which obviously were positive for oil. In terms of the daily setup, there really is no sign of this slowing down. We do have some big resistance levels above 84.99 and 86.39 to be aware of, but for now there is no sign of oil slowing. Taking a quick look at gold, very sort of choppy price action really. We did see this big reversal candle on the 15th of October, and we're failing to sort of overcome that as it stands. We're posting a little bit of a reversal today, but all in all, price action is pretty flat and remains quite range bound. So not expecting many opportunities in gold today. As I mentioned yesterday, silver looking quite strong. It had a decent day yesterday in comparison to gold. It still looks to be moving higher following the break of this short-term downtrend. Bit of stalling in the price action today, but it's very early in the session. Overall, it still looks pretty good potentially for a continuation higher, at least in a corrective manner in the short term. On to indices. So FTSE 100 continues to stall at this 7235 level. Prices really sort of not going anywhere at the minute. Maybe we're getting some sort of consolidation and acceptance of price around here. If we do get a big move to the upside through these previous highs, then that should lead to a continuation higher. Again, the FTSE is being dragged higher by the influence of the oil stocks and also the banks. And I don't see any signs of that changing at the moment. Obviously, all eyes on this November the 4th meeting from the Bank of England about the rise in interest rates. That will continue to support banks. And obviously, the oil prices continue to move higher as well. That's going to support the likes of BP and Shell, which have a fairly significant influence on the weighting of the FTSE 100. If we take a look at the DAX, that's pushed higher over the last few hours or so. given that it did try and make a little bit of a move lower, the selling isn't sticking. We're seeing buyers step back in. So for me, it looks like higher prices are still very likely here. The overall trend remains bullish. In the very short term, price is range bound between 14,809 to 16,031. That's the big resistance level to keep an eye out for on the upside in the short to medium term. So no signs of things changing there. On the Nasdaq, despite there being a bit of weakness in Tesla yesterday and in IBM, was only a mild bit of selling. Overall price action looks pretty strong, and we can expect, I think, to see a retest of these highs at 15,708 in the fairly short term. If we take a look at the S&P 500, that's outperforming the Nasdaq at the moment, and that's trading almost back at those highs. Bit of stalling yesterday in the price action in front of this 45.51 level. We're pretty close to that again today. Price action is pretty flat in the futures market at the moment, so we'll have to wait and see what happens later today. We've got a couple of data points due out later to keep an eye out for, as well as numbers from Intel and AT&T. So I'm going to leave it there on the index front. In fact, I may just take a quick look at Nikkei, because that seems to be faring worst out of most of the markets at the moment. As you can see, this is the daily chart. A fairly strong looking reversal has taken shape today after a bit of stalling yesterday. Overall, though, just looking at this and eyeballing it on a daily basis, it looks like price action is quite range bound at the moment. So probably expecting prices to remain quite choppy. We're sort of midway between this range at the minute, so no clear indication of opportunity at the moment for me on that. Okay, the gun to the head trades from yesterday, just the one, because obviously Steve's not around. I went short of euro yen, trying to fade this yen weakness, essentially. Buoyed a little bit by what I'm seeing this morning, but it wasn't to be yesterday. Maybe today we're getting a bit of a clearer signal on that. Down by 0.3R. So 3 trades in a row where things haven't gone quite according to plan, but they haven't been full losses. So it just feels like I'm being worn down a little bit by these, but hopefully we can get on one of these trades shortly and produce a decent winner. So what am I going to look at today for the gun to the head? I was enthused by what I was seeing really on these yen pairs, just purely from a speculative basis. Obviously the strength has been very strong in recent sessions, but we are seeing some evidence of a reversal here. Aussie yen is the one that's really caught my eye, because it has made new highs but also erased all of the gains that we saw yesterday. So I'm going to try and take a stab at this today. Let's have a look at the intraday charts for a bit of finesse on the entry. It's currently trading at 85.50, so let's get the short on there. I mean, ideally the stop would be up above these levels, because that's where it's probably safest. How far can this potentially unravel? Well, as always, I want the risk reward to be quite favourable, at least 2 to 1. I've got some support down here. This only gives me 1.5 R, so that means I'm going to have to tighten up the stop loss and be really quite aggressive with this. So let's go with that, just above that candle there, which is a really big impulsive move to the downside. That could also potentially be a short-term break of trend if we go from that low and project it higher with a couple of touch points. So going to use this candle here as the reference for the stop, placing it just above that. That gives me just over 2R, so not fantastic, but it is a speculative trade, because I'm very much going against the dominant trend here in the short term, trying to fade these recent gains. So target on the downside 84.30, stop at 86.07. Okay, numbers today, as I alluded to just shortly, just a moment ago, sorry, we have US jobless claims at 1:30. We also have the Philly Fed Manufacturing Index, which is due out at the same time. In terms of the jobless claims, they're expected to fall to 317,000, and the Philly Fed is expected to drop to 25. After that, at 3 p.m, we have the US existing home sales expected to fall 1.5% month on month. Aside from that, we do have some Eurozone consumer confidence figures out as well. And we have earnings from Intel and AT&T. We now have to wait until next week until we get some of the bigger, more popular names out of the US from the earnings on the earnings front. Okay, that is that from me. Nice and short today. Hopefully insightful for you all as always, and I'll be back tomorrow morning with a further roundup on the markets. Until then, trade safe, everyone. Goodbye.